Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Friday, November 11th. Well, the big deal right now, follow through. We're at critical levels on all these indices actually, so the behavior today on Friday going into the weekend at these significant levels where we found sellers before. Whoa daddy, the plate is set. Let's see what happens here. It's going to be an interesting day no matter what happens. I really just find this fascinating. So going back to what we looked at before, and this is a few days ago, what is our long-term perspective when it comes to the NASDAQ market? Get a close above 1820, and we want to have it happen today. Good, healthy way to go into the weekend, and then Monday and Tuesday will make or break that trade if we do. So it's a very interesting setup. It's the kind of behavior we're looking for. So how we behave in this range, a big deal. Now when it comes to the currency markets, and by the way, we're getting, these are the DEES contracts, so we're going to be rolling into March. Some firms started doing it on Tuesday. I'm looking to do this by Monday. So on Monday we'll be looking at March contracts for the stock indices and the currencies. But let's look at these currencies right now. What we were looking for was a relatively quiet day, and it's basically given us that kind of action. We're seeing smaller moves as this market slows down a little bit. These are transitional patterns in both the euro and the Swissy. The Australian dollar is the one that really gave us some follow through in that respect. That's the healthiest, next to the Canadian dollar. Quiet again in the British pounds, a little slowed down also in the yen. And Canadian dollar, we had some follow through. So the Canadian dollar and the Australian dollar is kind of leading the way. The issue is, will these other markets follow suit? And that'll tell us something about that perspective with regard to the dollar. What we know here is that the dollar slowed down. Wouldn't be surprised to see it get weaker. And if we're going to see that, I don't know if today will be a dramatic day for this. We do have retail sales coming out, and maybe that'll give a lot of different perspectives on what people think is happening. But that's what we're looking for. These are all transitional patterns. So that means unchanged to higher. It would be the action that we're looking for, and a weaker dollar. And if we look at the interest rate markets, though, we see the short end of the curve. Well, it softened a little bit. It did back off. It created a short position there. The 10-year notes tried to make this long position work. It did not work, and this would have been a losing trade for that market. Also broke to the downside, did not reach magnitude objective there. So it's kind of in a wishy-washy position, but again, it kind of fits if you look at the overall structure that we're seeing. I mean, this implies that we should back off as we had these sellers at higher prices, and we did see some of that today. But what are we looking for in terms of today's action, I should say, is that we're looking for a down day, and not only that, and then the bonds. But the issue is, if we trade back up towards these red lines that you see here, these sell points, that could be very bullish for these markets. And in the notes, it would be around 1812. Now, let's move on, and let's take a look at those metals. Gold slowing down. We're seeing that false sense of security again. I think from the short side, nothing telling us to abandon ship in any of the metals, but I think we should recognize the type of behavior we're seeing at these lower prices. And so if this pops up, I think I'd want to be on the other side of the fence. But again, nothing tells us that we should be getting out. These are at significant levels in terms of buying, especially copper. And we are looking for an unchanged kind of a day today in those markets. But if we see the stock indices taking off because of the fundamentals coming out, we could really see some action going on here too. Energy slowing down here in crude oil. We were looking for a smaller day after yesterday's action. That's appropriate. The real issue, though, is how we transition. That's what this is, a transitional pattern, where you have shadows on the top and bottom about the same size, small body candle. That's what I would call it. And what we're looking for now is a possible change in market direction. It says sellers are losing their enthusiasm. And that's what makes us cautious. But not losing their enthusiasm, check out natural gas. And natural gas is really an interesting market. Here we're seeing this market give us that little push here to the upside. Did not expect to see that. Would have also created a short position, and that would have lost money. And then we see it pushing here towards these highs. So that's nice and healthy. We are looking for unchanged to higher, and we're looking for a pretty good move today in natural gas. Typically, you'd look for a smaller move, but I think going into the weekend, we actually may, kick this a little bit harder, and we'd look for a stronger move in natural gas. Now, let's take a look at those grains. Soybeans slowing down. We're not expecting much more than that. I don't really think of this. I mean, this is still 50-50. We're right where we found buyers before. This thing could easily pop to the upside. Nothing telling us to abandon a short position. We see in corn, this market also made an attempt to the upside. It's still bullish. I mean, that's what it says for all these grains. We would be looking for a market to move up today. That's the action we're looking for. So we'd want to buy the breaks in those markets if we were trading them. And it'll be interesting indeed to see if we get that kind of follow through going into the weekend. Well, this concludes today's market studies. Hope you found a few ideas helpful. Looking forward to being with you again tomorrow. And in the meantime, take care.